My name is Dylan Potter, Vice President and Wealth Manager here at Howe & Russling. Today, we're going to be talking about donor-advised funds and qualified charitable distributions, which are two popular methods of charitable gifting. If you are one of the many individuals that donate to a charity on a regular basis, you may find yourself wondering what your options are outside of the usual cash donations. Donor-advised funds and qualified charitable distributions are two methods of charitable gifting that allow an individual to be strategic and thoughtful about how and when their donations are made. As of 2022, there are about 2 million donor-advised fund accounts holding a total of about $230 billion of assets. In 2021, Americans donated a total of about $485 billion to charity, and $72 billion of that was contributed to donor-advised funds. These accounts are established at public charities such as Schwab Charitable, Fidelity Charitable, National Philanthropic Trust, and more. Taxpayers are able to donate assets like cash, stock, real estate, bonds, and be able to claim an immediate tax deduction. Once the assets have entered the account, they are invested, which allows them to benefit from continued potential growth until they are distributed to a charity of your choice. As the owner of the account, you have the discretion of deciding which charities you would like to receive the funds, when the distributions are made, and how much is distributed. Donor-advised funds are most useful for individuals that intend to use a tax planning strategy referred to as bunching. Bunching is when you concentrate or bunch certain taxable deductions into specific tax years in order to maximize their impact. This allows you to be thoughtful and strategic with your charitable dollars and maximize the tax benefit that they are providing you. While donor-advised funds offer a high level of flexibility, it's important to note that grants made from a donor-advised fund cannot be used to fulfill a pledge made on your behalf to a charitable organization. In the same way that a beneficiary is named on an investment account or a retirement account, a successor can be named for a donor-advised fund so that in the event of the original owner's passing away, the successor is able to distribute any funds that remain in the account. A qualified charitable distribution, or we call them QCDs, is a direct transfer of funds from an individual retirement account to a qualified charity. By making this direct transfer, you can avoid having to pick up the distribution amount in your adjusted gross income. Your AGI is used to determine different items such as IRA contribution eligibility, net investment income tax, and eligibility for certain tax credits, and the amount you are required to pay in Medicare premiums. Regardless of your required minimum distribution age, you can begin making QCDs at age 70 and a half. Each individual is able to donate up to $105,000 a year in the form of QCDs, making it possible for a married couple to do a combined total of $210,000 a year. QCDs are especially popular when individuals reach the age in which they need to begin taking their required minimum distributions from their tax-deferred accounts. QCDs allow individuals to reduce that RMD by the amount directly transferred to charity. However, if you donate more than your RMD amount in any given year, it will not reduce the amount of your future RMDs. QCDs cannot be made to donor-advised funds, private foundations, or supporting organizations, and are not counted as an itemized deduction on your Schedule A of your tax return. Lastly, it's important to note that your QCD will not be shown on the 1099-R you receive at the end of the year. Therefore, it is crucial that you make your tax advisor or CPA aware of the organization you directed the QCD to, as well as the amount of the donation. In closing, when deciding on the best method to use for charitable giving, Howe & Russling's team of advisors can help ensure that your decision will ultimately be the most beneficial for your particular circumstances. Reach out to one of our advisors to have the conversation today.